All right, thanks everyone. Let's take a look at the market as we go into the new year here. We are, at least I am, seeing some signs of some potential rolling over, and it's not surprising. The sentiment has gotten so bullish that it's actually bearish for the market. Well, what does that mean? Sounds a little counterintuitive. Well, think about it. If the vast majority of investors are bullish, what do? They invest their funds. And what happens when they run out of funds to invest? The market runs out of buyers, and at that point, there's no one who could push the market higher, and it can only go down. So that's kind of where we're at. And I think any kind of catalyst that brings sellers into the market, spike in interest rates, something breaks out over there in the Middle East, buyers are, or the sellers are going to have a hard time finding buyers because the buyers seem to be pretty full. And we're going to see this with Nvidia. Nvidia reported these great earnings, and the stock didn't move. And sure enough, within a few days, it started to go down. Well, think about it. If everyone in their Aunt Mary has a full position in Nvidia, every manager on Wall Street wants to have, say, a 5% position or 5% of their assets in Nvidia. It doesn't matter what the earnings are. Because once those people have those positions, if everyone who wants a 5% position has a 5% position, doesn't matter what the earnings are. If there's no one left to buy it, it can only go down. All right, anyway, I just thought this was kind of interesting. 1941, day after Pearl Harbor. So let's get right into it. Different sectors are in the driver's seat at different times. This is kind of interesting. For years and years, healthcare was the second biggest sector, but financials have recently surpassed it. When I say recently, it's been within the past couple of weeks. So tech, the sector looks kind of okay, but I'm seeing some weakness in it. Same thing with healthcare. So let's go check it out. All right, we'll just go right through here. You can print this out. Here's the S&P 500, the SPY, all-time high 480. We're at 475. There tends to be resistance at former peaks. You can actually even see that here, around 460. Well, why does that happen? Well, people buy at the peak, and then the price goes lower, and they tell themselves, I made a mistake. And if this ever gets back up to the price I bought it at, I'm going to sell and get out of break even. So if you have enough remorseful buyers placing sell orders at a former peak, it becomes resistance. So on the upside, let's look for 480 for resistance. On the downside, I think there's a good chance we see support around 460. And this is because we have people who sold. This is seller's remorse, the opposite. And the price goes higher, and they're like, I made a mistake. If I get it back at the price I sold it at, I'm going to. So you have remorseful sellers placing buy orders at the level that was resistance. So resistance around 480, support around 460. Short term, the range we've been in is 468 to 477. Here's our tech sector. We could have finally, I think, well, broken this uptrend here. It looked like it was going to break here, but all this means is that if you think about how a chart is drawn, well, if something's going up before it starts to go down, usually you go sideways. And it's like a car, right? You don't just stop it and then instantaneously go backwards. You got to slow it down and come to a stop. And that stop on a chart would be like, all right, well, we start to go sideways. And that could be the first step before we start to go down. So within the tech sector, here's Apple, been trending lower. A lot of times when we get to former resistance levels, like I mentioned, we see resistance again. And then what happens is sometimes the people that want to sell start to notice there's other sellers lurking around. And then they start to worry they're going to miss out because the buyer's going to go to whoever's willing to sell at the lowest price. So these sellers start undercutting each other, and it starts a snowball effect. Drives us lower. Might be support around 190. Had been resistance, had been support. Support can form at levels that were support again because of seller's remorse. It's a different manifestation. People sell, price goes higher, and they're like, if it ever gets back to my level, I'm going to buy my shares back. So buyer's remorse can turn resistance into support, and seller's remorse can keep support intact for a while. So Apple looks a little bit weak. Microsoft also trading below important resistance. So there's just a big wall of sellers or group of sellers up around 376. Every time the shares have gone there over the last month, the sellers kind of come out. And they could keep a ceiling on the price. So Apple, Microsoft, two biggest stocks in the market, each looking not like screaming sell bearish, but they don't look bullish. And then Nvidia is the third biggest stock in the tech sector, and it's hanging out below this important resistance. And this is what I mentioned before. We got a pair report of these blowout earnings of what happened. The price didn't move higher. That's what we call bad action. You can't quantify it, but you know it if you see it, right? And when something is really good earnings and it doesn't go up, it tells you, hey, it doesn't matter how good the earnings are. Whoever wants to own it, they own it. So there's no one left to buy it. So here's Nvidia below this important resistance. So three biggest stocks in tech land: Apple trending lower, Microsoft below resistance, Nvidia below resistance. Here's our financials. Real important to watch here. If this XLF, which tracks the financial sector, reverses and gets back below this 37 level, I think that would be the key for a pretty significant sell-off. That's where I would start thinking about inverse ETFs, buying puts, whatever it is, however you want to play a market going lower. But as long as we're hanging out above 37, I think we're cool. But this could switch really quick. It's 37.60, so this is what we really want to watch. I think what was resistance has become support. If this important level in the financial sector breaks, I think that will be time to start thinking about how we can go short or profit from the short side. We saw tech is starting to get a little weak. The capital markets industry has been leading the tech or the financial sector higher, and this looks like it's reversing. It's not rocket science, although some people think it is, but I see no proof that they outperform the people that just kind of, or what we call a tape reader, that just kind of read this stuff and understand the principles like we do or attempt to do. And what this shows us is, hey, man, the blue team is in charge. The blue team's in charge. Oh, maybe the red team is taking over. The leadership could be changing. When we're going higher, the bulls are in charge. When we're going lower, the bears are in charge. When that leadership starts to turn, the price action, the way it manifests itself on a chart, could cross the trend line, and that's a wake-up call. Overbought could be breaking the uptrend. This is the industry that's led the important sector higher. I think financials are in the driver's seat. We just got to let the market tell us what to do. Now, if we go into healthcare, check this out. Healthcare has also gone to well-defined resistance. Well, I don't know about also, because I don't know what else I was talking about, but really well-defined resistance. I mean, look at that, 136 level. You don't need to be a market guru to see that. When we get to resistance, we tend to sell off. Why? Well, people that want to sell sense other sellers are coming into the market, which is why the uptrend has stopped, and they start to think, gee, if someone is willing to sell at a lower price than me, that's who the buyers are going to go to. So they start to undercut each other. You tend to sell off of resistance because anxious sellers undercut each other. Now, within the sector, there are industries. Healthcare equipment has been really strong. It's overbought at a level that had been support and has become resistance. Remember, people bought here, they're trying to sell to get out over here, break even. When the price was higher, they're like, this is easy. But then the price goes lower, and a lot of them are like, man, if I get out of this and break even, I'm going to. So when the price gets back to their level, you get these remorseful buyers who bought here trying to sell over here. And then the same thing could happen. The sellers could start to undercut each other. So this has kind of brought up the healthcare sector, one of the leading industries. Also is biotech. And biotech is really overstretched, and it's also at a level that was resistance. Could be starting to turn here. So you could look for puts in here. We could look at things within the biotech industry. So make sure you check back. All right, let's just keep going here. When I was the head of trading at a couple different institutions, this is stuff we would talk about at our research meetings in the morning. what sector is doing what, because the best managers, and believe me, I worked for some managers that were good, but I also worked for some that suck, that blew up firms. But that's a different story, which I will gladly tell you about. Um, but anyway, now, so consumer discretionary broke its uptrend, kind of going sideways. Not too much going on here. So far, we got to watch what's going on in tech. We got to watch what's going on in healthcare. The things I just talked about. All right, communication services looks like it broke its uptrend. Google. All right, so we get to resistance now. It's not a coincidence that this is where we hit resistance. It's a level that was resistance before. There tends to be resistance at levels that had been resistance before. People buy here, the price goes lower, they're like, if it ever gets back to my price, I'm going to get out of break even. Finally, a few months later, it gets there, so remorseful buyers from here place their seller orders here. This is why levels that were resistance can become resistance again. Now, if some of these traders that want to sell start to get anxious and undercut each other, this is going to push this lower. This is one of the biggest parts of the communication services sector. Between this and Facebook, we're looking at like 40%. Here's a longer term chart of Facebook, which goes back, I think, about 3 years. These are weeks. Look, resistance here. We've run into a level that was resistance back here. This is what we call market memory. When we see short-term resistance at former resistance, we're looking at the psychology of short-term traders. We can see the same pattern on a day chart, and it's showing us the psychology of a short-term trader. Here we see a long-term chart. This is the psychology of the long-term buy and hold investors. There's a lot of people who bought Facebook back here at the end of 21 that have regretted doing so ever since. Now that the price is finally back to where they bought it and they could get out of break even, they're doing so. So this isn't a coincidence if this is where we stalled out. Industrials could be could be testing their uptrend, about to roll over. This aerospace and defense ETF is a big industry and it's overbought. So if this starts to reverse, that's going to bring industrials lower probably. So just like we can look at the sectors to get an idea of what's going on in the S&P, we can get a look at the industries and get an idea of what's going on within the sectors. Okay, consumer staples been real strong. Sometimes money pours into the sector before the broader market goes lower. It's what we call a flight to safety. Energy support turns into resistance. Could be selling off here. Of course, this is going to follow oil. And now look at this. It's really amazing. What was support back here in June and July became support again in December to within $1. Think about how big this market is. To less than $1. Worth trillions and trillions and trillions of dollars. Yet somehow these precise price levels form. Now, as a trader, we know what we don't really need to understand why this happens because I don't think anyone really does. Well, we do because we understand psychology, but most investors are traders. Well, most investors are traders who don't know what they're doing. They have no idea how this stuff works. Look at that right there. Resistance here. Support here in August. Precise level. Resistance in November. Trillions and trillions and trillions and trillions of dollars this market's worth, and yet it takes these turns at these precise levels. Here's our utilities. Notice how resistance became support. Chance we get a little bit of a rally here, but it's kind of been going neutral. I don't see too much here. Materials, okay, at resistance, overbought. Things that are overbought that get to resistance tend to reverse. And we could look through the materials sector this week because you could get some good deals in there in the sense of options trading, cheaper premiums. If you go into Tesla, you go into Nvidia, they're so popular, the options premiums are huge. You start thinking about going into companies that like are lumber producers or chemicals. They're not as sexy, but those returns could be sexier than the stuff that you get in the popular industries, because you're going to be paying less money for it, and the percentage moves can be just as big. So anyway, there's materials and real estate, and then I'm just going to wrap it up. Thank you so much, everyone, and I hope to see you soon. Oh, here's some of our principles, which you can print out. Check it out. Oh, actually, ooh, can't believe I was about to go. Yeah, check this out. So I put that picture on our cover, Wall Street after World War II started, well, at least when the United States went in. So that was right here. So the Dow Jones was about maybe 108. It got down to about 93 in April of 42. And that's where we really started to rebound. So finally, we went from about 93 to where Japan surrendered about 5 years later, almost a double. Interesting here is when Germany invaded Poland, the market actually spiked. I assume that was people thinking, all right, well, we could sell them, weapons of war and so forth. But then when Germany invaded France, the market went into a free fall. Had a rebound. World War II, this is where Japan attacks the United States. The United States declares war on Japan, and then Germany declares war on the United States. Rebounds. Anyway, I like to talk a lot about history, and I'm sure you can tell by now. Thanks, everybody. I will see you soon.